Hey everyone, welcome back to Corporate Decoder, where we break down the complex world of business so you don't have to. Today we're diving into Horizon Technology Finance Corporation's latest report, and let's just say it's a mixed bag of numbers that paint a very interesting picture of the company's current standing and future path. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below, so come join the conversation. Alright, let's get into it. Horizon Technology Finance Corporation, or HTFC, just dropped their quarterly report, and a quick glance shows us their investments went down, but their borrowings went up. Let's decode what that actually means for the company and its investors. Looking at their assets for June 2025, we see total investments at fair value came in at $622.6 million. That's a drop from $697.8 million back in December 2024. This decrease in the value of their investments is a pretty big deal. It means the companies they've invested in are worth less on paper right now, which could be due to market conditions affecting those specific companies or the industries they operate in. Specifically their non-affiliate investments, which are basically stakes in companies they don't control. So a decrease in fair value. Their cost for these was around $669 million, but the fair value dropped to $605 million by June 2025. That's a significant paper loss of roughly $64 million on these types of investments alone. Meanwhile, their borrowings actually increased. By June 3025, total borrowings stood at 4025. Total borrowings stood at 4025. Wait, that's not right. Let me recheck that first number for borrowings. Oh, here we go. It says total borrowings outstanding net were $4025.1 million at June 30, 2020, 2020, 2020, 25, and $4067.9 million at June 37.9 million at June 30, 2025, and $4067.9 million at December 31. Financial health. Directly defining means they are paying down. That's a pretty good sign. It means they are paying down their debt, which is usually a positive move for financial health. Now, let's look at how the company performed operationally. For the 3 months ending June 30, 2025, they reported a net decrease in net assets of $20.7 million. That shakes out to a loss of 50 cents per share. This is a pretty significant drop compared to the same period in 2024, when they only had a smaller loss of $9.1 million or 26 cents per share. A big chunk of that loss comes from something called net unrealized depreciation on investments. This means the value of their holdings went down on paper during the quarter. For the 3 months ending June 30, 2025, this depreciation was almost $22.2 million. That's a big number and shows the market isn't valuing their investment portfolio very highly right now. Looking at the 6-month period, the picture gets a bit more stark. They had a net decrease in net assets of over $42 million, translating to a loss of 1.0T. This is a massive jump from the 6 months ending June 30, 2024, when the net decrease was barely noticeable at $479,000, or just a penny per share. The unrealized depreciation on investments almost doubled in this period, hitting over $54 million. This really highlights the challenges HTFC is facing in a tough market environment, especially with its focus on venture-backed tech and life science companies, which can be more sensitive to economic downturns. In terms of income, total investment income for the quarter dropped slightly to $24.5 million from $25.6 million in the prior year period. The interest income, which is the biggest piece of their earnings, went down too, mainly because interest rates have come down a bit. However, they did see a nice bump in fee income, which went up significantly, suggesting they are earning more from origination and prepayment fees on their loans. Now let's talk about expenses. Their base management fee paid to their advisor remained pretty steady, around $3 million for the quarter. But what's interesting is the incentive fee. For the 3 months ending June 30, 2025, they paid zero in performance, especially with the unrealized losses, didn't meet the hurdle required to trigger these performance bonuses for the advisor. This is a consistent theme when the company isn't doing well overall. These fees often get waived or aren't earned. Horizon Technology Finance focuses on a specific niche, investing in early stage companies within technology, life sciences, and sustainability. This sector can be quite volatile. When times are good, these companies can grow fast and pay back loans with nice profits. But in tougher economic times, like we've seen recently, these companies can struggle to raise more money or even pay back their existing debts. This shows up in the company's rising non-accrual status investments. As of June 30, 2025, they had 5 investments on non-accrual status investments. As of June 30, 2025, they had 5 investments on non-accrual status. That means the companies these investments are in are not paying back their loans as expected. The cost of these problematic investments was over $74 million. A massive chunk of their portfolio, around $621 million worth, is categorized as level 3 investments. This is the trickiest category. It means their value is based on unobservable inputs, essentially guesses or models, because there isn't a real market price for them. They make up about 99% of their total investments. This is a huge red flag for me. It means that the reported fair value of their portfolio could be highly subjective and subject to big changes if their assumptions about those unobservable inputs turn out to be wrong. On the flip side, they have substantial unfunded commitments to extend credit, meaning they've promised money to companies that hasn't been given out yet. As of June 30, 2025, these unfunded commitments were $149 million. While it shows they're actively looking to invest, it's also money they need to have ready. Luckily, their cash and investments in money market funds were around $77.9 million, so they have enough to cover some of these, but it's something to keep an eye on. Looking at the very end of the report, a major subsequent event is mentioned on August 7, 2025. Horizon Technology Finance Corporation and Monroe Capital Corporation entered into a merger agreement. This means they plan to combine forces. This could be a significant strategic move, potentially offering Horizon Technology Finance Corporation access to new capital or a wider range of investment opportunities through Monroe Capital Corporation's operations. However, mergers are complex and depend heavily on shareholder approvals and market conditions. All of this context means that HTFC is navigating a challenging market for its venture-backed portfolio companies. The decrease in investment values and the increase in investments on non-accrual status point to significant headwinds. The fact that almost their entire portfolio is valued using level 3 inputs means there's a high degree of uncertainty around their actual worth. While they've managed to reduce debt and haven't earned performance fees, the overall performance shows substantial paper losses. The pending merger with Monroe Capital Corporation could be a game changer, potentially providing much needed support or a new direction, but until that merger is finalized and its benefits are realized, HTFC looks like a company facing considerable risk, with its future performance heavily tied to market conditions and the success of its remaining and future investments. All of this context means that HTFC is navigating a challenging market for its venture-backed portfolio company scenes and the success of its remaining and future investments on non-accrual status point to significant headwinds. The fact that almost their entire portfolio is valued using level 3 inputs means there's a high. So what's your take on these numbers and what they signal for Horizon Technology Finance Corporation's future? Let me know your thoughts in the comments below. If this breakdown was helpful, give it a thumbs up and subscribe for more corporate decoder content. And don't forget to join our Discord community, linked in the description, to keep the conversation going. Thanks for watching and I'll see you in the next one.